Energy is definitely making headline news again, particularly over the last couple of days. Clearly is an awful lot going on in the world at the minute, and I thought it would be useful to share what I hope is a bit more of a rational view about what's going on, and to demystify, I guess, some of the noise that we're starting to see from a number of other energy brokers. But that's quite hard for people to do, because if I just share this was from the Times over this morning and last night. You've got some real contradictory views there in those titles. Oil majors fear threat of Iran blocking the Strait of Hormuz. Well, that was a big fear, and probably still is, although it hasn't played out. And then in the morning, you've got oil drop sharply after Trump announces ceasefire. So it's quite hard for people to read through the noise and understand how that's playing out in energy markets. Equally, again, shared from a Times article, there are some real headlines being made which strike me as just hugely overreacting and creating fear in the market. On the right hand side there's an analyst from a bank there saying that they're much more worried about European gas prices than they are about oil prices, and warned that if LNG production from Qatar and the United Arab Emirates were disrupted, it risks a repeat of 2022's energy crisis, just worth the second time. Now, that's just a huge statement to be making, and actually, there will be people in the energy market who are playing and preying on those kind of headlines, and I suspect scaring businesses into taking perhaps unnecessary action. So just some views again from our point of view. So actually yesterday, quite surprisingly, actually, there was very minimal wholesale market movement, and by market close yesterday, there was sub 1% movement on futures across gas and power. And I think it's fair to say that the whole market was expecting a much wider shock than that. And at the point of recording, a ceasefire has been announced, so we'll see how that plays out in the market. But some things to consider, and it's the same messages that we always talk to businesses about. Things can shift quickly, and get in a position to act. So get in a position to act is either be on a flexible contract where you can trade in and out of positions, or from a fixed contract, which I suspect is what the majority of clients are looking at, and have a tender in the market so you can refresh it on a day rather than requiring a 1-2 week turnaround. Consider your numbers. What does it mean for you? We talk to people constantly about operational cost. What does the cost of a fully fixed contract mean for you now? And if you're not signing it, what are you waiting for? A specific price, a specific cost level, a specific time before your renewal is due? Really give some consideration to, if you're waiting, what are you specifically waiting for? Not just, I've got time, let's just see. And there will undoubtedly be energy brokers claiming that if you don't sign by today, it's going up massively, and you're an idiot if you don't sign. And look what happened with Russia, Ukraine. You need to be signing these contracts now. I had quite a few calls yesterday from some businesses that I know quite well who were basically sense checking what other people were telling them. You absolutely don't need to panic, but you do need to be wary about what is going on and aware of what that cost means for you as a business, and then take action accordingly. As always, we're always open to talk to any business. We work with lots of trade associations. Feel free to reach out to us, and we'll hopefully give you a candid view of the energy market without any forced view of signing supply contracts. Always happy to talk to people.